I'm not a financial advisor. This is not financial advice. Please do your own research. Welcome to the Vinny G Markets channel, brought to you by Vinny G Money. Now, before we get into it, I did just want to update everybody that I did just install a new pop filter for the microphone. So hopefully the audio comes out a little bit better. We're updating the hardware over here. Also trying to keep the information as pure, uncut, and raw as possible. So let's get right into it. Let's go over what the stock market did these past 2 days. Well, before we get into that, let's go over some economic news these past couple of days. Again, the economic news is not great. We'll get into the first one, which is an article about the real estate market. U.S. pending home sales dropped for second straight month in July. We're starting to see a discrepancy here in real estate. If we pull up another article from June, actually this article is from today as well. It says U.S. home prices saw a record pace in June. So prices, again, in real estate, they do just keep going up, but you are starting to see a discrepancy in sales. Where is real estate going to go? Who really knows? Of course, the Federal Reserve does have their hand in this as well, in inflating these asset prices, especially when it comes to real estate. Because, again, I know we pulled this up before, but we'll keep pulling it up. They're making a minimum of $40 billion of purchases in mortgage-backed securities. If they weren't guaranteeing to be buying these mortgage-backed securities, would these mortgage companies be giving out loans like this, driving the prices of houses way up? And we have a second article. The second article just states U.S. consumer confidence fell to a 6-month low in August. I'm not sure what goes into measuring consumer confidence in the United States, but it being at a 6-month low in August just can't be good. But let's take a look at what the stock market did first on Monday. You see that the S&P 500 and NASDAQ both reached record highs. For the S&P 500, it was their 53rd record high in 2021. For NASDAQ, it was their 32nd record high for 2021. I just want to state that this isn't normal. We don't normally see this in the stock market where prices just go up like this. There are usually pullbacks and they don't reach multiple records highs throughout the year like this. But we're just in a different environment. That's why we can't really look at what the stock market did in the past, because the stock market right now, it's just reacting to the historic levels of the Federal Reserve asset purchases that are going on, which again is what's causing all these record highs. But if we go to what the market did on Tuesday, actually let's take a look at this as well. S&P up 7 straight months in a row. Again, that normally doesn't happen, but the market is just reacting to the historical levels of asset purchases being done by the Federal Reserve. So now let's go back to Tuesday. You see the market didn't really do much. There were actually slight, I wouldn't call these pullbacks at all. I'm just down a little bit. S&P 500, I'm down a little bit. Dow Jones, down a little bit. And also the NASDAQ, down a little bit. Again, nothing significant here. But we'll go to our indicators to see what they were actually doing within these past 2 days. We'll pull up the 10-year Treasury. As I pull it up now, it's at 1.32. Again, it's kind of where we want it. Nothing spiking, and that's what we're looking for over here, is that ultimate spike. It's staying at a calm level. Got knocked down a little bit. Went back up a little bit. Nothing crazy going on over here. So now we'll pull up our next indicator, the United States US dollar index. We see over here too, nothing significant. It's still below that 93 level, and I don't see any significant moves higher unless the Federal Reserve sends out one of their creatures, one of their presidents talking about possibly tapering or putting out any type of information like that. But what we can look at, we'll continue to look at those reverse repos. If we look at Monday, they did another 1.1 trillion. And if we look Tuesday, it was another 1.1 trillion. So as long as those levels stay elevated like that and no news or Federal Reserve news comes out about them possibly tapering or anything about them reducing asset purchases, I would say the U.S. Treasury and the U.S. dollar would stay at these levels, maybe go slightly lower, slightly higher, but really just stay at these levels, which is what the market is looking for anyway. And let's look at our third indicator, our big hitter, and that's crude oil. The reason why I wanted to make this video today is actually because of crude oil. As I pull the price up today, it's at $68.54. So it did slightly go down a little bit. Today it did reach over $69, but did get slightly pulled back lower, which is why the stock market got pulled back lower. But this is a fairly big week in crude oil when it comes to news. The first bit of news we'll go over is today in Minnesota. It looks like there's some type of situation going on where they're doing updates to a crude oil pipeline. That's an Enbridge Energy Line 3 crude oil pipeline. And within them trying to update it, it looks like there was some type of protest due to pollution and things of that nature. But the overall decision is the court sided with the Enbridge Energy Line, where they're going to go along with those updates. And you'll see the significance in that, because replacing that pipeline will allow the company to roughly double its capacity to 760,000 barrels a day. So doubling their capacity, that creates more supply. There were some people that probably looked at this that drove the price down of crude oil a little bit. There also is speculation going on for tomorrow's big meeting with OPEC, where they're going to decide if they're going to increase their oil output. This is a big decision being made, and it is going to affect the price of crude oil. You see that President Joe Biden, he already tried going down to OPEC, asking them to pump more oil. They respectfully declined, and we're now going into this meeting where they're going to basically decide what they're going to do with the production of crude oil. But this could basically go three different ways. They could say they're increasing oil production, or they're decreasing oil production, or they could be very vague and plead the fifth and basically not give us anything, say they're not sure and they're going to maybe keep everything the same and give us basically a runaround. That's definitely a possibility too, which is why I don't like playing that guessing game. But this is why we look at articles like this, because we know that the price of crude oil is what moves the stock market especially higher. If we see the stock market pulling back, but this report has a positive report where they say they're actually going to decrease production, we can then continue our bullish view on the crude oil market. And plus all that unrest in the Middle East, that does help the price of crude oil, unfortunately. I'm not saying it's right, it's just what it happens, and that's what investors are actually looking at. But that's what we're doing on this channel. I don't care about forward guidance. I don't care about company earnings. I just care about what the 10-year Treasury, US dollar, and crude oil is doing. And again, if that report comes out that they're decreasing production, but the price of crude oil doesn't really go up and the stock market is pulling back, we could possibly take a look at that as a good time to sell puts, maybe in the financial sector or energy sector, because we know when crude oil goes up, both those sectors go up and it brings the overall market up with it. But we really just got to wait and see what happens with this meeting and how the market reacts to it, especially on a short-term basis, because then we could sell those puts with 2 weeks or a month expiration. And all we really need in those companies then is to either just stay stable, not go down that much, and possibly go up. And I want to go into more about selling puts. I am experimenting with it myself. I've done it in the past, but it is a learning process for me. So in an attempt to get more comfortable with it, let's just say I paper traded some Microsoft puts with a $300 strike price that expires fairly early on this Friday. So within a situation like this where we sell Microsoft puts for a $300 strike price, we just need that price of Microsoft by the time this Friday comes around at market close to be at $300 or above. When I sold the puts, the price of Microsoft was at $303. It did right away go against me, of course, and drop down to about $301 and change. I think after market it was lingering around $302. But again, it's just a learning process. I'm fairly confident that the price of Microsoft could stay above that $300 level by the time Friday comes. Normally, we would sell puts at least 2 weeks, if not a month into advance. But again, it's just an attempt for me to get more comfortable and for you guys to start seeing if this is an actual way to possibly make money. So if you're interested in that, continue to tune into this channel. And I'm going to continue to work on my short-term and long-term investing strategies. And I know I said technical analysis doesn't work, but we're not using technical analysis to gauge the overall direction of the market or to put together some type of holy grail technical analysis system that doesn't work. And if you have some type of technical analysis holy grail system, you're definitely not giving it away on YouTube. And you're also not coming to a channel where a duck is talking about his financial market perspective. But I will research to see if there's any technical analysis tools that could help us locate and possibly select different stocks that would be in a good situation to sell puts. and also see if there's any good scanners out there that could pull us up companies that have good put selling opportunities. So again, if that's something you're interested in, please continue to tune in. Thank you for the view right now. Hulk smash that like button. And as always, I'll leave you with this: the God of the Bible, the God of Abraham, the Father of our Lord and Savior Jesus Christ is real, and may he bless you.
How to make money with options using time decay. When it comes to trading, nothing is ever guaranteed. We could be up one day and lose all our profits and then some the very next day. The market may be positioned to move a certain way, but there's no guarantee it will actually follow through. But there is one thing that is guaranteed, and that's time decay, or the notion that time will continue moving. That is the only thing that is guaranteed. Wait a minute, I can make money by betting that time will continue moving? Yes, that's right. It's not exactly as easy as that, but yes, that's the general idea. You see, with options, since there is a time element to the option's value called theta, or time decay, this is the only element or portion of options trading that is guaranteed. As long as you bet that time will go by, which you do when you sell options, you can make money. Of course, it's not so easy to completely isolate out the time component of options, otherwise everyone would easily make money with options. When you bet on time decay, you will automatically incur some directional risk, particularly as the date of options expiration gets closer and closer. During the 2 weeks prior to an option's expiration, and particularly in the last few days, time decay happens the fastest. That's when it's easiest to make money with time decay, but it's also the easiest to lose even more if the market moves against you. There are some ways to mitigate this directional risk through fancy things such as credit spreads and iron condors, but you can never completely eliminate the directional risk. How much you can make depends on how many days remain until an option expires, assuming you are selling that option rather than buying. By selling an option, you can capitalize on time decay. By buying an option, the time decay works against you. You see, each option has an expiration date. Pretty much every Friday, there is a different set of options that expires. As long as the option you are selling is not in the money, meaning the stock is not above its strike price for a call, or for a put, not below its strike price, or in other words, the option has no intrinsic value, then the value of that entire option will drift towards zero at 4 p.m. or 4:15 p.m. on Friday expirations day. If you're selling that option, drifting towards zero is exactly what you want. That's time decay, and when it expires worthless, you get to collect the full value of that option automatically. That's how time decay works, and that's the only thing that's guaranteed in options trading. As long as you sell options that expire out of the money and have no intrinsic value on those Fridays, then you make money by selling theta and capitalizing on the simple concept that the time remaining in an options contract will always dwindle down towards zero at expiration. However, if you are wrong and the option becomes in the money prior to or by expiration, you could lose multiples of what you would have won if you were correct. So it's almost like collecting $1 each time you are correct. But if you lose, your loss wouldn't be just $1, it could be $5. Hey, nobody said trading, even on something like time decay, is necessarily easy. But if you can make good educated guesses here and there, you can bump up your odds of winning significantly and make some small but consistent money with options by capitalizing on time decay. So that's how you make money with time decay, by selling options and hoping they expire out of the money at expiration. To learn more about options, check out these other videos in the How to Make Money with Options video series with LifestyleTrading101.com. Make sure you subscribe to our YouTube channel and visit our website for daily